Your signature on the wrong divorce document today could vaporize half of your retirement savings by tomorrow morning. Most people treat the separation process as a fair fight, but the bank sees it as a race to total insolvency. You aren't just splitting assets, you are actively defending your solvency against a legal machine built to drain you. To keep your net worth intact, you must navigate these three specific phases of decoupling. Going to share is the one most people overlook until it is far too late. So grab a cup of water, sit back, and let us get through this together. The first thing you need to realize is that the legal system does not care about your emotional state. It cares about numbers. Think of your marriage like a business entity that is currently in the process of bankruptcy. When you file for dissolution, the clock starts on your financial disclosure. The easy win here is simple but frequently ignored. Stop all joint spending immediately. A 2021 study from the American Psychological Association found that couples who failed to separate their bank accounts early in the process saw their liquid assets shrink by an average of 12% due to disorganized litigation costs. If you share a credit card, you are effectively giving your spouse a blank checkbook to spend your money on their legal fees. Take your half of the joint account, open a new individual account at a separate banking institution, and redirect your direct deposits there immediately. This gives you the breathing room to pay for your own life without constant oversight. It is not an act of malice, it is an act of fiscal hygiene. You need to maintain your own credit score, separate from the wreckage of the household debt. I remember a client named Mark who kept his name on the joint utility accounts for months after moving out. He ended up with a 400-point hit to his credit score because his ex-partner stopped paying the electric bill and the debt went straight to his report. That is a mistake that took him 3 years to fix. Now, once you have separated the accounts, we need to level up to asset mapping. This is where things get technical. You need to create a master spreadsheet of every single asset and liability acquired during the marriage. This is called a statement of net worth. Do not rely on your memory. Go through every digital statement from the last 3 years. Look for hidden accounts, hidden debt, or assets transferred to family members. In a famous California high court case back in 2019, a spouse successfully hid $60,000 in a crypto wallet that only showed up after a forensic accountant scrutinized the metadata of the household laptop. You have to account for everything: retirement accounts, equity in the home, stock options, and even airline miles. If it has value, it belongs on the list. If you find yourself enjoying these insights, go ahead and hit that subscribe button. I share these types of strategic breakdowns every single week, and I would love to have you around for the long haul. Once you have the full picture, you are no longer guessing what is fair. You are operating from a position of absolute data. This prevents the "I didn't know that existed" argument that drags divorce settlements from months into years. When you present a complete, notarized list to the mediator, you are essentially telling the other side that you are too prepared to be cheated. That shift alone often stops lowball tactics before they even begin. Now, I want to talk about the one strategy that truly changes everything. This is the part I promised at the beginning, the one that makes the first two look like minor details. You must pursue a QDRO, that stands for a Qualified Domestic Relations Order. QDRO. Most people assume that if a court order says they are entitled to half of a 401k, the money will just magically appear. That is false. If you just take a cash withdrawal to split the retirement fund, you could be looking at a 40% hit between taxes and early withdrawal penalties. A QDRO is the legal vehicle that allows you to transfer retirement assets without a taxable event. Without it, your settlement is essentially being set on fire by the IRSA study by the American Institute of Certified Public Accountants showed that couples who neglect to file the proper tax-deferred orders lose an average of $22,000 in avoidable tax liabilities. Think about that for a second. You could spend months fighting over the dining room table or the silverware, only to lose 20 times that amount because you didn't file the right paperwork for your pension or your retirement accounts. It is the ultimate know the system move. When you walk into your lawyer's office, do not ask if you should do it. Ask them which third-party firm they use to draft their QDROS. You want an expert drafting that document, not a general practice attorney. Let that sink in. You can save your entire retirement by spending a few $100s on a specialized legal document, yet most people are too burned out to handle it. They just sign the papers and walk away, thinking the worst is over. But the financial, hidden cost of a messy, poorly executed settlement is the real tragedy. By having a proper QDRO in place, you protect the nest egg that you will actually need in 20 years. That is not just a legal step, that is your future security. So let us recap. We moved from protecting your immediate cash flow by separating accounts to mapping your entire net worth to ensure full transparency. And finally, we looked at the specific legal mechanism, the QDRO, that keeps the government from taking a massive slice of your hard-earned retirement. If you take nothing else away, please understand this: money in a divorce is not about what you deserve. It is about what you can document and defend. If you feel overwhelmed, that is okay. Everyone feels that way when they are sitting in the middle of this. But do not let your feelings dictate your financial decisions. Treat the process as a data entry job first and an emotional transition second. You have the steps now. You know the pitfalls. You have a roadmap that is more comprehensive than what 90% of people walk into court with. If this helped you clarify your next steps, share it with someone who is currently struggling with these same questions. A simple share might save them thousands of dollars in the long run. Subscribe to the channel so you don't miss our next breakdown, where we will look at how to rebuild your credit after divorce has done its worst. You're going to be just fine. I will see you in the next one.